Welcome to ACE Accounting with Shamaila Hussain. Before we learn the rules of debit and credit, we must clearly understand some basic accounting terms. In this video, we'll cover short and simple definitions of assets, liabilities, expenses, revenue, and capital, exactly as required for O-level, IGCSE, and GCSE exams. So let's get started with some very important accounting terms that you'll study throughout your accounting journey. Don't worry, they're much easier than they sound. Let's begin. All right, let's understand what an asset is. An asset is anything a business owns that helps it earn money in the future. For example, it can be cash, bank, buildings, furniture, computer, machinery, motor vehicle. These are the things that are going to be used by the owner of the business to run the business. An asset is divided into two types: current assets and non-current assets. A current asset is your cash, your bank balance, your inventory, the money that you will be receiving from your customers. This is your current asset. But when you talk about non-current asset is an asset that is used in the business for a long time, usually for more than one year. It can be your land, it can be your building, machinery, and vehicles. These assets help the business over many years. Okay? Now let's understand what a liability is. A liability is something the business owes to others. This could be money owed to suppliers, bank loans, unpaid bills. If the business has to pay it back, it is a liability. Let's move on to expense. An expense is the cost of running the business on a daily basis. Now, when you're running a business, you will be needing electricity, rent, salaries to be given to your workers there. Okay, so let's talk about what your expenses are. Expenses can be your rent, it can be your salaries, your electricity, and there are many more to come. So when we'll move to the chapter, when we'll start accounting, we will be coming across expenses, a lot of expenses there. All right, then we move on to revenue. What is a revenue? Revenue is the income a business earns from its main activities, usually from selling goods or services. Children, when we are doing business, we are aiming to get good revenues, all right, a good profit also. And anyone who does business is going to be focusing more on the revenue, okay? So what is actually a revenue? It's the money earned from sales or fees. Revenue can be just not the sales, just selling items, but it can be anything that can be a service business. For example, a teacher is also making revenue by teaching students, and there are many other fields where people are giving their service income. They make their income by giving their services. Okay, so revenue increases the profit of a business. All right, now let's move ahead to the next topic. Capital. What is capital? Capital is the money or assets invested by the owner into the business. It may be in the form of cash, equipment, or other assets introduced by the owner. Capital shows the owner's investment in the business. Before we end, let's review the main terms we discussed today. Assets are what the business owns. Liabilities are what the business owes. Expenses are costs. Revenue is income. Capital is the owner's investment. These basic terms will help you understand accounting better as we move forward. That's it for today. If you found this helpful, don't forget to like, subscribe, and share. See you in the next lesson.